Welcome to the Capital Discussions Roundtable. I'm Tom Nunemaker with our guest Amy Meissner. Before we get started, quick disclosure: the Capital Discussion is not a broker-dealer or an investment advisor. This presentation is for educational purposes only. We don't know your situation and have no way of knowing what level of risk is appropriate for you. We're not making any specific trade recommendations. Risk of loss in trading options can be substantial, so please be aware of all of your risks prior to placing any trades. Hypothetical computer simulated trades are believed to be accurately represented. However, actual profit or loss may vary due to market factors such as liquidity, slippage, and commissions. And again, this is for educational purposes only. So with that, I'm going to just pause recording. Okay, we're back with Amy's presentation. So for those of you who don't know Amy, she ran a Weirdor and nested iron condor trade alert service for us for what, a year and a half or so?
I think about 2.5 years, actually.
Was it? Okay,
Time flies, yeah.
yeah, I'm losing track of time here. So Amy's a great trader. I've known her for many years, and we're glad to have you here, Amy, to see what's new with the Weirdor and the 14-day version you've got.
Oh, great. Thanks for having me back. I always love giving these presentations, and it's good to be back. And I know we had a couple of misstarts schedule-wise, so finally getting this thing rolling, so it's good.
Yep, take it away.
All righty. Well, with that, I just want to say thank you, everyone, for joining today. And for those of you who couldn't, thanks for watching the recording. It's been quite a while since I've been on a roundtable here, but I've been working pretty diligently on my trades, and I've come up with something new that I've been kind of playing with, because a lot of people like shorter term trades. What about weeklies? I'm always being asked. So I came up with this trade, and it's called the 14-day Weirdor, and I think you guys are going to like it. It's pretty cool, so I'm going to talk about that today. So let's get started. I apologize for the dog. I'm going to try to get rid of him right now. Okay, there he goes. All right, sorry about that. Okay, so for those of you who don't know me, I'm sure a lot of you do, but for those of you who don't, I'm just going to do a quick little intro. I began trading options in the mid-90s and started trading full-time in 2006. I basically specialize in mainly high probability option strategies. I've tried all sorts of different things, but those are the ones that I like the most. I want to have a good probability of making money. My goal has always been to have a monthly income and consistent returns. And I like strategies that don't require me to sit in front of a computer all day. I've done a lot of speaking engagements and presentations for many trading clubs and educational trading services, including Capital Discussions. I've been an instructor and coach. I teach classes on my trading strategies and style of trading, including trade alert services. So that's a little bit about me. So let's get started. So you guys are probably wondering, well, what is the 14-day Weirdor? It's basically a market neutral trading strategy, and it's based on the Weirdor structure. So I'm sure a lot of you have seen some of my presentations on the Weirdor that I've traded. So it's based on that, but it's as far as the structure is concerned, but it has a shorter time frame, and so therefore has a different management style as well. So I'm going to go through all of that today. Some of the characteristics and advantages are very similar to the Weirdor. It also has a high probability of wins, a very simple risk management adjustment style. It has a lower sensitivity to volatility than a conventional condor. It still has a negative vega trade, but it's just not quite as high as a conventional type iron condor. It has a low upside risk, and the downside risk is generally pretty easy to manage. Usually I use additional debit spreads to manage that. It's very simple. And it works very well in a variety of different market conditions, just like the Weirdor. Also, just like the Weirdor, it can be traded in indices, stocks, ETFs, or futures. Just has to be enough sufficient liquidity and premium. It's best traded, I think, using indices or futures, and that is because you don't have to do any searching for stocks. You don't need to worry about earnings or specific sector events. And of course, it gets favorable tax rules when you trade on options on indices or futures. So you get that nice tax rule that hasn't changed for us, where even items that are held for a short amount of time, including like less than a day, are still only taxed at the long-term capital gains, or at least 60% of them are taxed at long-term capital gains. So that's a really good, favorable tax rule for us. Of course, also, there's no need to pick direction with this trading style, which I like. You don't have to be a technical analysis guru. Of course, that would help, but there's no requirement to do that. Most adjustments are really simple, can be done mostly with a conditional order. So therefore, there's really no need to sit in front of a computer all day. So as long as you got an internet connection somewhere, it's pretty easy to deal with. So the basics for the 14-day Weirdor are: the planned capital is the same again as the regular Weirdor, just $18,000 is usually about the margin that's going to be used. It's going to be somewhere between $16,000 to $18,000 margin. However, I always like to have at least a minimum account size of $20,000 for that, just to, account for any, just a little buffer. It's always good to have a buffer. So, and I'll get to your questions as I kind of go along here. I don't know if that'll dump me out of the presentation, but maybe Tom can help me with questions. So if you have questions, I definitely will be answering those. And these numbers, by the way, are for what I call a single tranche, a Weirdor, which is the same as the 14-day Weirdor. A single tranche as being a single unit. So the ratio between the different elements that make up the trade are going to be based on a single unit. And of course, it is scalable, so that could be multiplied from there. The target profit for the 14-day is a little bit different than the Weirdor. It's just a little bit less. It's obviously not on for very long, or shouldn't be. So the profit target's between 2% and 4%, although it's very similar. And I look for profits very quickly, within the first 5 to 6 days. So I want to be in and out of these as quick as possible. As far as losses are concerned, they definitely should be kept as low as possible. They really should be lower than 5%, so that you get a nice, smooth equity growth curve, that you're not having like big fits and starts where you're going down a lot and then having to make up for that. So that's something to keep an eye on. And the win-loss expectancy is also very similar, just 10 to 2 or 83% wins to losses. So very high probability trade. But the difference between this trade and what makes it so unique and compared to the regular monthly Weirdor is its time frame. So that's the biggest feature difference, and it creates differences in management style and in how to deal with the adjustments and exits. So that's where the difference comes in. The days to expiration is going to be less. It's going to start off at 30 to 35 days to expiration, give or take a day. And the goal is to be out of this trade within 14 days or less. It could be 15 or 16, but generally within 14 days or less, I want to be out of this trade, hence the name, the 14-day Weirdor. So because of this shorter time to expiration and shorter days in the trade, the timing and the decision-making on the adjustments and the exit is going to be different. That's where the differences come in compared to a monthly Weirdor. So I want to go over some more benefits, the benefits now, as opposed to the similarities. And differences. I'm going to go over the benefits of this particular trading style, and having this shorter time frame is what it allows you to do. So one of the things that's pretty cool is it allows for a greater return potential, either per month or by year. So for instance, with a monthly trade, let's say I'm putting on a monthly cycle. Every monthly cycle I'm putting on a trade. I'm going to have 12 opportunities per year to put a trade on, so 12 trades per year. And let's say with my Weirdor, the average it's always averaged around somewhere between 2% and 3%. That generally includes losses as well, but it could be a little bit lower if there was a couple losses. But basically 2 to 3% per trade or per month, because there's one per month, which equals somewhere between 24 to 36% per year possibility of a return of around there. With the 14-day Weirdor, I can have an opportunity to enter this trade every week. So I could have a trade on every week if I wanted to, as long as the it looked like a good trade to put on, the opportunity is there. So that gives me 52 trade opportunities per year instead of 12. So if I have an average of about 2% per trade, that's going to be somewhere about 8+% per month, or 104% per year. Now it's going to be a little bit lower. Obviously, there's going to be a couple, a few losses in there. But as you can see, that is a much higher percentage per month or per year than what's capable on a monthly basis. Obviously the potential is there. It's not a guaranteed, but the potential is there. Now, in order to do one of these trades, the 14-day Weirdor every week, that would require a larger account, because if you're putting one on every week, there's most likely going to be a chance where there's going to be 2 trades overlapping. There would never be more than 2, but there would be a possibility of 2 trades overlapping. So therefore, you would have to have enough capital to deal with 2 tranches, one put on each week. So you'd have to have enough capital to handle 2, at least at a minimum. So that would increase your account size, but the possibility of making additional return is there. Now, that greater return potential is still achievable without the need for a larger account size as well. So another way to look at this would be to enter a trade every 2 weeks. Therefore, you would have no overlapping of trades. Or, if you had one that was only on for 5 days, you can enter one the next week, but just making sure by either, entering every 2 weeks on average, that have no overlapping trades, there would be no need for additional capital. So in that case, again, a monthly trade would be 12 per year, with an average of 2 to 3% per trade per month, 24 to 36% per year. With the 14-day Weirdor entered every 2 weeks, that gives 26 trade opportunities per year. And so if you have an average of 2% per trade, that's 4+% per month, or 48% per year. Of course, again, not guaranteed, but it's, it has the potential of being, just more opportunity to make profit, especially if it's got that high probability, same high probability nature. So you're going to have an opportunity to make a higher profit potential or higher return over the year or over the month. And I keep seeing questions pop up. I don't see the questions, I just see numbers, so I will get to those. And Tom, if you're still here and you want to ask me a question that you see popping up, please let me know.
Okay, there were a couple. Andrew said, when you say futures, do you mean stock index futures or commodity futures such as oil or gold?
I've never worked on it in oil or gold. As long as there is enough liquidity and not super drastic volatility. So I think that this trade does best, and the Weirdor altogether does best in kind of a medium volatility environment, medium to high. It works in lower volatility, but like if it's super high, like, maybe oil's bouncing around too much, it might be a little bit tricky. But then again, you might be able to get enough premium to be far enough out of the wings to where it works. So the key would be to test it based on the basic structure and rules and see if it fits with that particular underlying. But usually what I meant by that would be any futures, but usually I'm generally thinking of things like the ES or the Russell 2000 mini future contracts, things like that. But because those are very highly liquid and they have a decent amount of volatility.
Just 2 more quick ones.
Sure.
DGS, is your 104% per year expected return accounts for overlapping trades requiring more capital?
It would be based on the higher capital. So it'd be 104% of the lower capital of each individual trade. So it wouldn't be based on the higher capital. Is that the question you think? Did I answer that right, Tom? Is that what do you ask?
Yeah.
I'm not sure.
I think he's asking if you have overlapping trades, then you have to have two trades open, then you have more margin in play.
Right.
So is 100% based on that total margin, or just like one of the trades?
It would be one of the. I'm just counting each trade.
Okay,
So
so
it would be 100% of a smaller margin. So if you had a $20,000 account, it would be assuming you get like 100% of 20,000, not 100% of 40,000.
right.
Does that make sense? Yeah.
Yep. And then another one, so is it 50% on 40K required?
50% on 40.
K
I'm
required.
sorry, can you repeat that?
Uh, he says, so is it 50% on 40K required?
50% on 40K required. I'm not quite sure.
Not sure where the 50% is.
Yeah. 50% on
Maybe
40.
you can rephrase it.
Oh, okay. I think maybe
Oh,
he means uh, um, each trade would require $20,000 or, about 18,000. Would use about $18,000 of margin. I just like to have a buffer. So each tranche, like a single tranche, 14-day Weirdor would require approximately $18,000 margin. So I would just add a buffer of $20,000 per trade. I hope that answers the question. And I think it might when I get to the next slide too. So
okay. We had a couple more questions pop up.
sure.
Andrew says, what's the starting DTE for a 14-day Weirdor? It's probably about 14 days, I'm guessing.
No. 14 days is, I think I had that another slide. So 14 days is just how long, I don't want to be in the trade for more than 14 days. So that's why I call it the
Okay,
14-day Weirdor. The
gotcha.
days to expiration is somewhere between 30 and 35 is the days
Okay.
to expiration on entry.
And then Kevin asks, how long have you been trading this 14-day trade?
Okay, I've been working with it probably for about 6 months. I just started trading it live, so I don't have a bunch of live test data. I just have back testing data, but it works very similar as far as the way the money comes into the trade as the Weirdor, which I've been trading for many years. But the adjustment style is different. So um, similar types of adjustments, but it's different. So I haven't been doing it on a regular weekly basis. This is just a brand new trade that I'm just kind of getting started with. So,
Okay,
but since it is based on the Weirdor, which I do have a lot of experience with, there's a lot of similarities, and that's a really pretty good, robust trade.
okay. And then we had another question or a couple more, but why don't we hold those until more of the presentation is finished?
Okay, no problem.
All right.
Okay, so one other thing about using capital and trying to get more return or this out of the trade as having a shorter term trade is, what if you just want to shoot for the same annual return, but you don't want to use as much capital at risk? So for instance, let's say you had $40,000 of capital to throw at the Weirdor trade. So if you used $40,000 of planned capital for each trade on a monthly campaign, you would do a 2-tranche Weirdor once a month. So you'd use all the capital once a month on a 2-tranche Weirdor instead of a single tranche Weirdor. Let's say you average somewhere between 2 and 3%. Again, that would be 24 to 36% per year. And your margin risk would be approximately about $36,000 because you're not really using that whole 40,000 planned capital. You're just using about 18,000 margin per each trade. So you're really putting only about $36,000 at risk at that point. With the 14-day Weirdor, what you could do with an account like that is you could actually cut the capital per trade in half. So you could use only $20,000 planned capital for each trade by trading a single tranche 14-day Weirdor every other week. Now you've got 26 weeks to play with. Say average this 2% average per trade. That's going to be about $24,000, 24% per year. So it's the same. You could try to get the same, go for the same annual return, but you're only risking $18,000 per trade instead of risking $36,000 per trade. Of course, you're trying to manage that risk so you don't risk it all. But in essence, you only have that much risk on the table at a time. So in that respect, you can actually cut your risk in half and still shoot for the same annual return. So that's kind of a neat way of looking at it as well. Another benefit of the shorter time frame is flexibility with entry. So because it's shorter, because there's tons of weekly opportunities or the weekly expiration cycles, especially in the indices, there's a lot of flexibility with which trade. So there's a trade setup available each week. So you can basically pick and choose which week to enter a trade. And this can be something that can help avoid a missed opportunity. So sometimes, what if you're on vacation and you miss a monthly trade and you have to wait until the next month to get in on another monthly trade? Here you can, be somewhere doing something else and say, okay, well, I couldn't do this week, but I can enter a new trade the next week. So you still have an opportunity. So that's another way of looking at it. And of course, you can choose to have one or more trades per month as desired. So just more opportunities to trade if you like that, or more opportunities to miss, or more ways of missing an opportunity of like a monthly cycle type trade. And then finally, another benefit to having a shorter time frame is that it allows you to diversify risk over time. So there's lots of ways to diversify risk, and one way to do it is over time. So as an example here, I've got the Russell 2000. This is the month of May in 2017, so that's what's inside this a yellow box. And as you can see, the month of May kind of chops around a little bit at the beginning. Then we have this big hit down, and then it kind of starts moving back up slowly. Then we come back down, have another big hit, and then we have this huge rally. So it's kind of a lot of weird stuff going on. You just got some sideways chop, you got some big down moves, you got some, some big up moves and some chop. So also, if you can see here, this is the RVX during that same time period. You got this huge vol spike in the middle. When that big drop happened, you got this huge vol spike. So obviously, being a negative vega trade, that's going to also affect it. So with this trade, when I mean diversify risk over time, there's going to be 4 entry day opportunities. So as you can see with these little arrows here, I'm pointing out, you've got, let's go back here. So this day is a start day, let's say, for the week. And that day is moving forward, you can see is going to be kind of choppy. Here's another start day. You've got some chop, and then you got a big down move. Here's another start day where you've got, some movement up, and another day where you've got some down, pretty sharp down move at the end there, and then a big rise. So those are 4 different, market conditions just in 1 month. So what I want to do is kind of take you through a couple of those and talk about how this trade reacts during these times. So I don't know if there was any other questions before I get started on some of the examples, Tom, or?
Well, I think that people want to see the trade first and then go through the questions. I think that
Cool.
makes sense.
Yeah, okay, sounds good. Okay, so here's trade 1. So when I say trade 1, I'm talking about that first arrow. So, that first arrow there. So trade opportunity 1 in May of 2017. So here it is. Launch date is towards the end of the week here on a Thursday. This is May 4th, 2017. The RUT was currently at 1384, and this is what the trade looked like at the start. So you can see it's, just looks like a Weirdor trade, basically. It's pretty flat delta. It's going to be a little bit longer delta than the way I enter the Weirdors, just a little bit, but it's still pretty flat. Still has that same kind of flat T plus 0 line, pretty flat, and less risk on the upside than the downside. But it does have that downside hedge. So moving forward, really on this particular, as you saw from the chart, the market kind of moved around, right? Just kind of bounced around a little bit. So during that time, we never hit an adjustment point. So on day 6, I was able to take profits. I didn't have to wait 14 days. It's already up 2.9%. So I took profits. The RUT's at 1393. So it started at 1384. It ended up at 1393 6 days later after chopping around a bit. Gained some theta, and 6 days in, there's no reason, even though there is a possibility to make more profit, the goal with this trade, the strategy in this trade is to get in and get out, because things can turn, and why leave on risk when you can have another opportunity in a few days. So that was a very quick in and out. Now let's take a look at trade 2. And if we go back, I just want to, right here, you can see it kind of, again, chopped around, and then we had a big down move and then started moving back up. So, but then again, this is a very short-term trade. So let me show you what happened during this time frame. So this launch was on 5/11/17. The RUT was currently at 1390. And again, I think, like I said, it's going to be a little bit longer delta than a typical Weirdor, but still pretty neutral. And then just that little bar there is what happened in the market before I put this trade on. So that's where the market was moving around before. This is where it was on the time, the actual time the trade was entered. Okay, 5 days later, this is the RUT at 1392. We're up 2.6%. And in my rule book for this particular trade anyway, that's a high enough profit to just take and go. So day 5, there would be no need to stay in the trade. Now, if we go forward here, day 5 is right here, just before that big down move. So it's like, well, that's kind of lucky, just missed the big down move. But that's the kind of thing what I mean by diversifying over time. I don't want to, I want to be in and out of this trade as fast as possible. And hopefully, now it's not going to always happen, but hopefully that will help avoid some of these moves that might be unexpected. So some of the trades might hit those moves and other ones won't. So those should make up for the ones that do. In this case, the second trade also seemed to have missed this big downturn, but just to have fun with it, let's say I didn't take profit and I just continued the trade. So let's say we didn't take a profit on day 5, went forward. Here's day 6. In the morning, the Russell starts moving down. We're at 1374. It's time for an adjustment. So I make an adjustment. So we're down 1.1%, but nothing too drastic. Then we go to the end of the day on day 6, and we're down even further. Now we're at I think we went from 1374. So we started at 1390, now it's at 1374. Now we're down to 1361. So it's a pretty big move. You got a 30-point move. And I think it continued down a little bit further. So of course it's time for another adjustment. Now we're still under the tent here, still has a possibility of making money. We're down 3%. So it's not, horrible, but hopefully this trade's going to be able to come back and make some money. So in this particular case, if we move forward day 8, the market did come back. It might not have, but it did. So in this case, it came back. Now it's up a few points there, and some theta allowed to come back in. Some of the vega went away, so the T+0 line kind of rose a little bit there, and now we're basically break even. So take it on down a little bit further. Day 12. Now the RUT is at 1372. And there's profit. It looks, if I look at the risk reward at this particular point in time, I want to be out by day 14 or 15 at the latest. There's really not much more to make here without taking on too much risk. So I would just remove the trade, even if it's a small profit. So by taking those profits early, like you saw before, it's just more comfortable to take them early on day 5 than to wait and possibly something happened to the trade in between. Now, something might not have happened and I could have made more money, but that's just an example of how the trade responds in those situations. So it was able to respond obviously through choppy and then through a pretty big down move and still come back and not take a loss on that particular trade example. So that's just a couple examples of how it works. So for those 2 examples, for instance, in trade 1, it was launched on the 4th of May in 2017. It lasted 6 days and made a profit of about 2.76%. And that included commissions. I always include commissions on my testing. It doesn't include a lot of slippage though, so there's probably going to be a little bit of slippage there. Trade 2 was launched on 5/11/2017. The first example showed staying in the trade till trade day 5, which hit a target profit level, which I would take, which was 2.43%. But if I had stayed in and not taken my profit target at that point, then I would have stayed in the trade for 12 days and made less money, but still didn't take a loss. So it would have come up a positive just under 1%. And if I go and show you the results of the last two trade opportunities for that month, the third trade was on for 4 days, also profitable, 2.68%. The fourth trade, that was the one where the market kind of went down and then had a sharp down move, and then it had a really sharp move up. So a little too much, probably on that case, it would have been, some downside adjustments, so upside adjustments, probably too many adjustments to be in a trade for such a short amount of time to be able to make a profit on it, because it's such a short trade. But it did take a loss, but under 1%. So that's how those ended up. But if you add the 4 trades together for the whole month, and then you get about 7.13% for a single. So this would be, let's say, a single tranche. So for each trade. So let's say I used a single tranche trade, $20,000 of capital for each tranche, even though I had to have a larger account working there. The 7.13% would be based on that $20,000, not the $40,000. And then if I had gone further, on the right here, you see where it says trade 2B. If I had taken that trade number 2 out further, then the profit for that whole month would have been a little bit smaller, but still would have come out profitable. So that's kind of what I mean by diversifying over time, that some of the trades during the month might not be profitable and some of them might be profitable. All of them might be profitable. You don't know, because usually during a month there's lots of different things happening. Sometimes it's the same, but sometimes you get little bumps in the road. But the goal would be to hope for an overall profit for the whole month. So are there any questions so far that you want me to answer, Tom?
Well, there are quite a few. How close are you to finishing the presentation?
Getting pretty close.
Okay, well, why don't you just wrap up the presentation, then we can circle back to the questions.
Okay. Yeah, I'm kind of talking faster than I normally do. So as I mentioned, this is a new trade. I haven't been trading this live for very long, so I don't have a bunch of live data for you on this. But it is based on the Weirdor, which has certainly been a proven strategy. Although this is definitely a lot quicker, and the adjustments are a little bit more proactive because the trade is not on for very long, and as well as the exit profit taking is also very proactive. But in this back test that I did, I started in January 2017, took it through February 2018, so it went through that huge move up in January and that final correction that we finally had in February. And it did pretty well. And I have to say, the Weirdor and the 14-day Weirdor and a lot of these theta trades really they all rely on premium. So when we are in these extremely low volatility environments, they're really difficult. So it actually did really well, even though we were in an extremely low volatility environment, not being able to get a lot of premium, not being able to get really far from the market. But they definitely tend to do better when the volatility is back to like a normal range, which it's getting to now, which is a good thing. But this test went from January 2017 through February 2018. There were 55 total trades. The average days in each trade was about 8. For the wins, there were 46 wins out of the 55 and 9 losses. The average win, and this is, again, it's a single tranche, 14-day Weirdor, using about $18,000 of margin, $20,000 account. The average win was $369. The average loss was $315. The largest win was $669. The largest loss, $735. And I'm sure you can guess that was in February 2018. And the max consecutive wins were 12, and the max consecutive losses were 3. So that was the testing that I've done, and now moving forward, going live. So that pretty much is a finish of the presentation that I'm going to talk about. Part of the presentation that I was talking about of the 14-day Weirdor before I talk about some other things. So if that's a good spot to answer some questions, that'd be great.
Yeah, actually, maybe it would help if you there's like a toolbar, I think up at the top when you're presenting, and you can bring
Uh-huh.
up chat, and then you should be able to see the questions
Uh,
without me having to read them to you.
oh, here we go. Okay, it's just my cursor is not working really well. So can you see these questions pop up or?
I don't see them. Zoom
Okay.
hides them.
Well, okay, I got the cursor. Well, I don't know where the cursor is, but let's see.
So if you go down, Greg Farner said hold questions to the end. We got all the questions above that. So the next one to answer from Steve says, how do you limit losses during a steep sell-off? It's probably halfway down.
Okay, yeah, for this particular trade, I like to manage this with, the same type of adjustments that I do on the monthly Weirdor, but I'm not going to stay in it as long as I would a monthly Weirdor. So when I get into a monthly Weirdor, I'm doing, my basic, put debit spread type adjustments in certain points, and then I might start tweaking and doing some other things for this trade because and then it, has the possibility of coming back and making money or even possibly making money on a crash. But for this trade, since it's on for such a short time, I'm more apt to enter the adjustments to the downside to a certain point, and then the risk reward doesn't become worth it, and I'd rather take a loss. So in this particular type of strategy, it's better to take a small loss and go on to the next trade, as opposed to trying to get something to work and then let the market just kind of drop off and not ever be able to get back, because there's just not enough time in the trade. So if there's a steep sell-off, those adjustments will definitely help. There's an out-of-the-money put insurance that helps because exponentially it's going to make more money. But I'm not going to stay in the trade and try to make it work if we're having an extreme sell-off. I'm just going to put my adjustments on, straighten out the deltas, and get out if it really starts to come off. Now, as an example, though, we had a pretty steep sell-off in February, and that was part of the backtest that I did. And the biggest loss in that, there were 2 losses in a row during that month, and the biggest one was at $735. So that was about, let me see the percentage on that. Let's see. It was about 4%. Let's see. I can't get this thing to scroll here.
I think the next one is, do you
See the
still?
trade handle the questions, have trade monthlies and the Russells are fills in the, oh, I've traded monthlies in the Russell, are the fills and the weeklies tight? Actually, I get pretty good fills in the weeklies. I have to say, obviously, there's going to be a lot more volume in the monthly contracts than there are in the weekly contracts for the RUT. I'm not sure, it might be a little easier on the SPX, but there's still plenty of volume on the weeklies and the RUT and the quarterlies. But it's probably better used for, I wouldn't put on thousands of contracts or 500 contracts. It'd be kind of tough to do that many. It would be smaller. Not, I wouldn't go like 50 or 100 tranches. It would probably be better suited for, 1 to 20 tranches or something like that, or just do like little bits at a time. But I seem to get pretty good fills on the weeklies, as long as it's not too many contracts going in at once. With Weirdor and Jeep, there was half-sized version available. Same with 14-day Weirdor. I haven't really come up with a half-sized version, unfortunately, but it's been asked so many times, I'm just going to go back to the drawing board and do it. I mean, one way to do it would be not to trade the Russell, would be to trade something like a ETF or something, but I just haven't come up with a half-sized version yet. But it's definitely on my list because it's been asked of me quite a few times. So I'll have to get back with you on that, Otmar. In your back testing, do you account for commissions and slippage? I do account for commissions. It's $1 per contract. And I do some slippage, like I'll give a nickel here and there, but it's, realistically, it's probably better to take off at least, 10% for slippage, something like that. would be it would be a good idea to do with those results. But commissions are always included. I always include round trip commissions, so not just getting into the trade but coming out. And I think I told you I did $1 per contract, which is pretty typical of what everybody seems to be getting. How does a trade perform in a strong up market? It seems to perform pretty well. I mean, I'm not really defending the upside very much. So if the market starts moving up, I'm really pretty much taking off risk on the upside pretty quick and trying to get my profits pretty quick. So it really depends. If it's an extremely low volatility market and then the market keeps going up from there, I'm not going to be able to squeeze too much out of it, but it should make some profit. But if it's a higher or middle range volatility and the market starts going up, you're going to get that volatility drop to help as well. So then you can squeeze out even more. So usually that helps. Have you back tested the February 9 crash starting with the worst case scenario? Yeah, that was the examples I gave. I think the worst one, there was 2 trades in a row that were not profitable, and the worst one was at 4%. Of course it's back testing, but the worst one was the 4% drop. I think that was the second week in February, if I recall. Let's see, let me go forward here. Whoops, where's my cursor? For some reason, the cursor disappears when you do this, so I'm trying to scroll through these, but I can't seem to find where. Here we go. What happened on trade 3 with the big down day followed by up move? I think that I did show that, Bob. That was one of the examples I showed. It was actually trade, that one, trade 3 was up about 2.6%. It was trade 4 where we had some down move and then up. Let me go back to the chart. This is the problem with this. I'm going to have to hit escape or something. I can't find my cursor, so I want to show you guys something. It's just not, there we go. Now I got my cursor back. Sheesh. All right, so let's go back here and move this out of the way. All right, let's see here. So I think you're talking about, okay, so I showed trade 1 and trade 2. Trade 3 just kind of had an up move, so it handled that pretty well. That came out ahead about 2.68%. Trade 4 was the one that gave trouble and was down a little bit lower than 1%, and that's the one where we had this down move a little bit, but then it really came down quite a bit here, so that would have triggered some adjustments. And then we had that sharp move up. I think that might be the one you're talking about. That one was a losing trade of about 0.93%, but the other ones were all profitable. I think that's what you meant, Bob, I hope. Regarding commissions, how many contracts is one tranche? So one tranche is going to be about 27 total contracts because it's going to be made up of 3 spreads and some out-of-the-money puts, and each spread has a combination of 10, 2, and 1 contracts. So it's going to be about 27 total commission dollars if you do $1 per contract going in, and then you have to do a round trip going out as well, and if there's any adjustments. Can you do a live back test for early February 18 and also early January 18? I can bet you your slippage will be massive, even though right on the back test might not be perfect reality. I wouldn't say it would be massive, but it would be, you definitely want to probably add a higher percentage for those times as well, for sure. Because obviously if the market's moving really fast, one way to deal with that would be to enter conditional orders, which is what is a good thing to do. Thinkorswim has a great way of doing that where you can enter a conditional order. So if something gets triggered to add an adjustment, you can enter a conditional order and then give the market makers like 10, 15, 20 cents. So that would be your slippage, but at least you would know that you would get filled. And that's one way to deal with things like that. So you don't have to, in real time, try to get something done like on the fly. Peter's asking, slide title says October 2014 on the results slide. Oops, that was probably because I used it from a different on the result. Oops, yep, you're right. That should not have said that. That should have said May 2017. There, I fixed it right on the fly. Thank you for catching that, Peter. What's the loss target? So try to be under 5% for the loss target. Obviously, these trades kind of bounce around during the day, but usually the usual way losses are taken in this is if you're having like, a constant down move and you make an adjustment and you make an adjustment and then you have to make another adjustment. At that point, it's almost like, I don't have a lot of time in this trade. What's the risk reward? It's probably better to take the loss. And if the adjustments get made on time and with a decent price fill, the previous ones, then that should really mitigate some of that loss. So it's not too bad. That's kind of how I look at these. What is the trade? Chris, I'm guessing you started a little late in the presentation, so you'll have to watch the recording at or if you're just asking for the trade name, it's the new 14-day Weirdor, which is a shorter version or shorter time frame version of the Weirdor. So it's put on with 30 to 35 days to expiration, and it's meant to only be kept on 14 days or less. What delta do you use to start of the trade for short put? Like a 16 or lower delta. I don't want to be higher than a 16 delta on my short put, Kevin. I'm basing the amount of, can you explain the trade, the amount of that you're basing the profit on? I'm basing it on the margin, which is about $18,000. It's going to be somewhere between $16,000 and $18,000, but generally it's about right in between there. Let's say 17 and a half. So say $18,000 is what I'm basing the profit percentage on. So for a single tranche of this trade, it would be about an $18,000 margin, and that's the profit potential, or the profit is based on that. So I'm just doing a single tranche in these examples. SPX, yes, this can be traded in the SPX. As I mentioned, it's a new trade, so I really like the Russell, so I always start off all my stuff in the RUT, so I don't have any examples in the SPX. It'll be something that I will be working on in the future, though. It'll obviously be a little bit different, probably the spread widths instead of 20-point wide, which is typical in the Weirdor for the RUT, maybe 25 points. And the deltas for the shorts might be a little bit different just because of the premiums that you can get with the SPX, but that's something that I have to look at. But I have done testing and worked and done trades in the SPX for the monthly Weirdor. And again, it's a little bit different, 25-point spreads. I usually have the short put at around the 14 for that, but that's in the monthly cycle at the 14 delta. And but it seems to do pretty well too. So it's just a little bit different than the RUT. And of course, the volatility is a little bit different. Is this an iron condor or just a vertical? I may have missed the beginning. Oh, hey, Carol. This is based on the Weirdor trade, also known as the asymmetrical iron condor or the Jeep, or they're all traded it's the way I trade it. So the Weirdor or the asymmetrical iron condor, the way I trade it is what this is based on. So if I look at a graph, let's go back here. Where did I have that first graph? Here, this is what it kind of looks like at launch. So that kind of Weirdor shape where it's kind of based on a condor style strategy, but with you don't have equal number of calls to puts, and there's a couple of hedges on the put side that are started from the beginning. So as opposed to, and I should have had that slide in here and I didn't. I had a good comparison slide on another presentation where it compares an iron condor to a Weirdor style. And an iron condor, you're going to have this flat top and equal sides here on the calls and the put, and the T+0 line is going to be much more like a frown. So you got kind of like a hill where it doesn't take long before you move from one side to the other that you're kind of dropping off. With the Weirdor, it's much more flatter of a T+0 line, and the adjustments that are made are meant to be made to keep keep things flat while you're collecting theta. So it's a little bit, it deals with the market movements a lot differently than a typical iron condor. It's a little more resilient. Let's see here. I'm losing my spot. Russell futures are half the size of, okay. Are you incorporating SPX $1 commissions or E-minis? I didn't do anything on the E-mini. Just $1 commissions are off of just the, standard option contracts like indexes or ETFs or stocks. Is there an alert service coming? Yes, that's what we're going to be talking about next, Otmar. But let me get through the rest of these questions. Start date without adjustment. Tire trade put on one time. The tire trade is put on at one time, obviously in pieces, in the ratio exactly. And this is for Wayne. And the start, the start trade. I think that answers your question. Yeah, it's all put on at the same time with 30 to 35 days to expiration. Will it offer the special commission with live vol again? Tom, that's a question for you.
I'll have to contact them, see if they can give us a rate.
Okay, there you go. I'm sure you can. That's the same question.
It took me about 2 years with Thinkorswim, so.
Oh my gosh.
Yeah.
I finally got them down to 75 cents. Put credit, yeah. Yep, you got it, Andrew. Let's see if we own the. Tim, if we own the AIC program, we get a trade parameters for the 14-day, or will we have to buy the 14-day program? So, well, the way. Okay, so I know a lot of you guys know that I do a video course for the asymmetric iron condor, which is also the Weirdor, my version of the Weirdor, and I will be doing one for the 14-day Weirdor as well, or 14-day asymmetric iron condor, whatever you want to call it. The difference is it's just different. Like, people learn differently. So with the video course, it's kind of like you just get a big brain dump. Here's everything you need. Go on your own. You're on your own kind of thing. It's got lots of detail and all that stuff. With the alert services, what's great about them, I mean, they're both great. They're good in conjunction, or it just depends on how you like to learn. But what's great about the alert service is you can kind of see how it works in real time. So with the alert service, you get an overview of what the trade's supposed to look like. So you know what to expect and kind of like, the basics of the basic guidelines. But you get to actually see what I'm doing and why I'm making decisions, when I'm making decisions, what exactly they are. So you don't have to, kind of takes out the guesswork, and you get them in real time. And then you can look back at past trades as the service continues. In the future, you can go back and go, okay, I get it. And you kind of learn on a as you go basis, kind of over my shoulder, so to speak, as opposed to trying to learn everything in a video. So both really great ways of learning. They complement each other, but they're just a little bit different. So obviously I highly recommend both, but yeah, it's just a different way of learning. General overview of what the Weirdor is, Chris is asking. Man, I should have, should have put up some other slides. Maybe I should do another presentation. So the general guidelines for what the Weirdor is it's a, let me see if I've got. Here, let's see if that does anything. Okay, here we go. General guidelines. 10 put credit spreads, 1 put debit spread, 2 call credit spreads, and an additional far to the money put is what makes up the Weirdor. The general Weirdor is usually put on with 40 to 55 days to expiration. They are all 20-point wide spreads for the spreads. The calls are not adjusted or defended as much. They're generally just taken off for a small loss because the market tends to move up more often than it moves down. So that's why this trade was created in the first place. And the downside adjustments, they're generally they're added to smooth out the deltas as needed. And they're usually put debit spreads that are added. The Weirdor monthly version is, like I said, put on with more days to expiration. So there's more wiggle room there. But the exit date is 14 days to expiration on that, as well as the 14-day Weirdor. The only difference is the time, because the time frame, you have more opportunities with the 14-day. You have to enter trades. You have to be, pretty proactive with your adjustments, and not that you don't with the other one, but you have to be pretty proactive with your adjustments on and exit timing. So you want to be able to try to take profits as soon as possible. You don't want to wait too long. And you have, like I said, more opportunities for trades. So you have more opportunities to make a higher potential return. So yeah, it's probably be a good idea to come back and do a little more detailed presentation on it. So, I'll do that. So I apologize. Let's see here for those that don't know it. Let's see. Could you give an overview?
And while you're looking, Roger said, is there a preferred, there is a group rate with capital discussions for Thinkorswim. It's $1 a contract. I don't know if that's better than what you've got, then it's probably worth doing, but it's not 75 cents, but it's better than the rack rate, as they say.
Yeah, definitely. Casey's asking, do you check this trade once a day for adjustments or monitor it throughout the day? I like to put in alerts. A lot of times I'll put in a conditional order to just take care of an adjustment for me. Like, if I'm going to, if the Russell gets down to a certain level, buy a put debit spread, give the money, give the market makers an extra 10 cents or something to make sure it gets filled. And that usually does the trick. Or I'll set up alerts so I don't have to sit there and watch it. I don't want to, I'm not one to kind of watch the markets all day. So I kind of have to, because that's what I do. I'm doing trades for other people and the trade alert services and all that stuff. But if it was just my account personally, I would be out going on a hike and set some alerts and conditional orders to take care of most of this stuff, which is pretty easy to do. I like David's comment, collect $200 and get out of jail free. Yeah, it's pretty much, I just want to collect my money and go. I don't want to stick around and wait for the market to do something that takes away my $200 or whatever it is. When do you adjust the trade, end of day or as the market moves? As the market moves, again, just setting up alerts or conditional orders. Now, there is another way of doing this, though, and a lot of people do this where they'll say, you know what, I'm going to look at the trade at 1 or 2 times a day, maybe, a couple hours after the market opens and a couple hours before the market, or an hour before the market closes, or something like that. And those are the times of the days that they look and they say, do I need to do something? And they just do it at that time. And most of the time that's okay, unless of course there's a big, crash or something like that happens. But I would imagine you might get a heads up from that just by looking at the futures. But that's what a lot of people do, and that's not a bad way to trade either. So I tend to just kind of work with alerts and conditional orders. What is the starting DTE for a monthly Weirdor? It's about 40 to 55 days for a monthly Weirdor. Usually I do somewhere about 45 days is the typical, 42 to 45 days. Rick is saying there are videos on YouTube about Amy's Weirdor. You know what? Yeah, there is. And in capital discussions. I've done other roundtables. So definitely a lot of good presentations on the monthly. You got the preferred rate. I only did backtest with the Russell DG. I didn't do anything with the E-minis. Since there's like a trade every week, it took a while to get through all that. So that'll take me a bit, but I'm planning on looking through, if not like a whole year, but at least spot checking different underlyings like the SPX and maybe the E-minis. Do you have an exit sequence for the 6 legs of the Weirdor? Yeah, I like to take off the, there's 2 ways of doing it. One is just, take off the put credit spreads first, which is a good thing because that's where you're making most of your money. You want to get it out of there. Another way is to just kind of do things slowly so that the deltas kind of stay flat as you go through, but the market doesn't always let you do that. But that's another way. A third way would be to add some kind of an option, put or a call or a combination or a spread that flattens out the deltas completely so that you can get out of the legs. It's really 3 trades, so it wouldn't be 6 legs. It's 6 legs, but it would be 3 spreads and then the single put. The single put, you can probably wait till the end because it's generally not, it's far out of the money. It's not really going to change price much. I'd concentrate on the 3 spreads first. And DG saying, sorry, I meant, have you done back tests or live trades with S&P or only the Russell? Just the Russell. Yeah, just the Russell, DG. So I think that goes through all the questions. And now, as you guys know, I have done, had a past alert service at Capital Discussions with the Weirdor and the Nested Iron Condor that ran live from the Weirdor from February 2015 through July 2017, so about 2.5 years on the Weirdor and about 1.5 years on the Nested Iron Condor, running from March 2016 to July 2017 before working on some other projects. And now I'm back, but I just wanted to share, for those of you who don't know, it was pretty successful. We had a really nice run there, and the alert services did really well. So these were, $20,000 capital account for the Weirdor, which was just a single tranche Weirdor monthly at the time, and $50,000 capital for the Nested Iron Condor, which was because sometimes you might have something overlapping and so forth. So they did pretty well. The Weirdor, we had 29 total trades during the service time. Average days in the trade was only 26, 25 wins, 4 losses. The average win was about $567 with an average loss of $434. The largest win was $1,186. The largest loss was $1,149. And the max consecutive wins was 11 with max consecutive losses of only 2. And all of those numbers are real. That has slippage, it has commissions, it has everything. So, because those were real trades. The Nested Iron Condor, 17 trades during the time of the alert service. 30 days in the trade was the average, with 15 wins, 2 losses, an average win of $1,108, an average loss of $1,361. The largest win was about $1,705, and the largest loss was $1,776, with a max consecutive win of 7 and a max consecutive loss of only 1. So I stopped the services because I was working on some other projects, some video courses, and some other projects that I was working on that there was just not enough time in my day or my brain to concentrate on everything. But I've been meaning to come back for quite a while, actually. It's just taken a little bit longer, and just wanted to get everything put together for you guys. So, but I've been meaning to come back for probably about 6 months now, and ended up taking a little bit longer of a sabbatical. So, but now I'm back. So I wanted to introduce a new alert service launch. And now it's going to include all 3 strategies. I'm going to have the Weirdor strategy and the Nested Iron Condor like I did before, but I'm also going to have this new 14-day Weirdor as well that's being included. And of course, there's a special price to start off with that is, if you take advantage of it, I think it's good for 7 days, Tom, I think is what you put it at.
Yeah, for a week. Mm-hmm.
For a week. Then as long as you stay subscribed, you can keep that lower price. And the website, thank you, Tom, for putting this together, is at www.aeromir, at aeromir.com, which is something cool that Tom can tell you about, /Amy. So he, I think, what did you say it was? Your old Dungeons and Dragons something.
Character, yeah, from high school back in the 70s. Yeah.
So anyway, it's pretty cool. It'll have all the features that you guys are used to. I did, for those of you that were previous subscribers, and you saw my launch of, I kind of had an interim site, amysoptionalerts.com. I put that up because I had done a survey a while back, and I just wanted to, didn't want you guys to miss out on any trades. And as I was waiting patiently for this to be put together with all of the additional features like the chat rooms and community and all that kind of stuff. But anybody who signed up over there, again, as long as you're subscribed, you get the same pricing. So basically the way it works is The special pricing has a monthly rate of either $99 per month for any one of those strategies. Pick any one of them. Or if you want all three of them, it's only $129 a month. And the first month is 50% off, and then it goes to the $99 or $120, $29 a month. So if I go to this, why don't I just go to the website? Do I have it up? Let's see. Let's go there. Here we go. So if you go there, you can see the special.
A little countdown timer. Yeah.
A little countdown. Thank you, Tom. I appreciate that. A little bit about me, what's included in the subscription. A little bit about each trade. I'll be putting a lot more content together for you guys. But I wanted to get this up. And again, everything is 50% off for the first month. And then it goes to a monthly rate. So that's what we're doing. And appreciate you guys watching. And I think this is a really good, fun new trade, but it's going to go along with my other staples that do really well, I think. So if there's any other questions, let me get back to the.
Oh, Fred just asked how he gets the special rate for Thinkorswim. Let's see. It's on this page, Fred.
And then Noelle, I know you signed up. So for those of you that signed up on my interim site, I wasn't sure how long that was going to be up. I put it up because I didn't want to kill Tom. There's only so many hours there's in a day for him to put this stuff together.
My wife Gabby appreciates that. Yeah.
And you were going through that move and all that stuff. So I had put out a survey a few months ago, I think at the end of the year, and I got a lot of interest. And then I didn't come out with anything because we just didn't have anything ready. So I waited for a while, and I thought, God, I'm just like everybody's missing out on all these great trades. I'm just going to put something together really quick and let Tom get this thing up and running at his own pace. And of course, he's, as soon as I get it up, as soon as I get my other interim thing up and running, he's like, okay, I got it done. Almost. So thanks, Tom. I appreciate that. But so I put that together. Obviously it has, a lot of the same features. It doesn't have that community aspect. It doesn't have Slack. It has, but it has all the alerts and the emails and everything. And that's great. And as far as anybody that signed up over there, don't worry, it's going to continue. You're not going to lose anything, but we will get you guys moved over to the new site, and your pricing will be the same. You're not going to have to worry about anything. It'll be pretty seamless. So it'll just be, this whatever you signed up for pricing on that site is what you're going to get moving over. So nothing's going to change, except for you'll get all the extra features that, Tom has brilliantly coded. So
there is a Slack
a few months.
Well, there is a Slack integration. I don't know if Amy, if you want to be on Slack, but the Slack alerts, the notifications do go out for the plan updates and the trade. So you can get those on Slack.
Oh, okay.
Oh, how much capital for? Okay. How much capital if you're going to trade all three? Do you need?
Okay, so if you're going to, let's say you traded all three strategies. The Weirdor itself is $20,000 capital. The nested iron condor is $50,000, so that would be $70,000. The 14-day Weirdor could be either 20 or 40, depending on whether you want to choose putting one on every week or putting one on every 2 weeks. I'm probably going to do anywhere from 2 to 4 trades of that per month. So it could be anywhere from $20,000 to $40,000 on top of that. So it would be 50 plus 20 plus another. So it would either be 90 or 110,000 if you wanted to trade every single trade. But you get them all to play with. Post a link to the website, please. There you go.
Right,
Thank you, Tom. So it's just Aeromir, AEROMIR.com/Amy. And that's the presentation. So cool. Thanks, you guys, for watching. I hope you guys sign up. I'm looking forward to adding some new trades. I would like to say that I'm in the middle of a couple of trades right now, a monthly Weirdor and a nested iron condor, but I'm getting ready to add a new 14-day Weirdor. I'm going to look either this week or next week at the latest for sure. I want to make sure everything's up and running properly though. So for sure next week at the latest, we'll have a new 14-day Weirdor trade to work with as well.
Sounds great. Well, thanks,
Cool.
Amy. Really appreciate it. And
Thank you, Tom. I
I'm
appreciate
sure the
all your hard work
services will
here.
be successful just like they were before.
Yeah, absolutely. I'm sure they will, and I appreciate all you've done. So, um,
All right. Well, thanks,
cool.
everyone, and we will see you next time. Thanks, Amy.
Thanks, guys. Bye.